We actually like the U.S. banking sector compared to global financials, and that's for a number of reasons. The first is that the overall level of interest rates in the United States is higher than in many countries in Europe and in Japan, for example. That is helpful for spreads, which accounts for a good portion of revenues for banks. The second is that interest rates should rise more quickly than they will in some other countries. The Fed started raising rates in December of 2015 and has raised them several times since then. We'll probably have two more, at least in 2018, and then another two in 2019. And so that will be helpful to bank margins and profitability. Another thing is that the capital levels in the United States, when we think about leverage levels, for example, in the US, the capital levels are higher as compared to many other countries. The recent tax changes that were implemented in the fourth quarter are very beneficial to banks. They tend to be high, or were very high taxpayers with a rate between 30 and 32%. Post-tax reform, that's made the rates closer to 20 to 22% on average. So that's going to increase the profitability of the U.S. banks as well. Regulation is softening a little bit in the United States, so that will lighten the regulatory load for a lot of companies in the United States. And I guess I would also mention that the U.S. economy, while not booming, is steadily improving, and that should also be beneficial to U.S. banks. And then finally, the valuation, even with a lot of pretty positive tailwinds, the valuation for the U.S. banking sector is actually pretty reasonable at levels below historic averages. So we actually like the profile of the U.S. banks compared to global financials right now.